So, private banking or wealth management versus asset management. Two words that are often used interchangeably, but actually refer to quite different financial services with different sectors in mind. So the first main difference is the type of client. So typically with private banking or wealth management, your clients are high net worth individuals, so people, as opposed to companies that would use the service of an asset manager. So any kind of company such as a pension fund or a hedge fund or an endowment fund, or even just a bog standard regular company that wants its surplus cash invested. Then there's the size of funds involved. So typically, even though the individuals using private banking services or wealth management will be high net worth individuals, they're far less likely to have as much money as the likes of a FTSE 100 company or an S&P 500 company. So typically with these services, the funds in question are a lot lower than they are with asset management. Then the final main difference, which is probably the biggest, is the type of service involved. So typically with an asset manager, they are looking primarily at investing, managing a portfolio of equities, bonds or alternative investments, and trying to maximize the return based off of a specific risk profile. Whereas with private banking, typically, yes, you'll be looking at investing, but also encompass other areas such as estate planning, tax optimization, traditional banking, credit and lending, and even, a concierge service, which you're not going to get in asset management. And it typically is just like a more high touch service. So with private banking, you're dealing with the clients themselves, whereas typically with asset management, you're going to be dealing with some kind of advisor to the institution. So for example, if Apple want advice on how to manage their pensions, then, they're going to probably be using the likes of KPMG or Deloitte or one of the big four to, advise them on how to manage these assets.